Hello everybody. This is another question on pro forma business documents, and this basically is from IGCSE. It's October-November 2019, paper 1, variant 2. It's question number 3. The question here says, Tamello is a trader. He buys goods on credit from Aswell. So Aswell is the seller, Tamello is a buyer. The traders exchanged various documents in July 2019. In the first part, they are saying complete the table by naming the person who issued each document. Name the book of prime entry in which each document would be recorded by each trader. So invoice is obviously always issued by the seller. So Aswell has issued the invoice because she is the seller, Tamello is the buyer. Book of prime entry used by Tamello is the buyer, so he'll use purchases journal to record this transaction. And Aswell will use the sales journal to record this transaction. Then they're saying debit note. So debit note is always issued by the buyer. In this case, Tamello is the buyer. So I'll write here, Tamello will issue the debit note because it's like buyer requests the seller to reduce the amount of the original invoice. So when Tamello wants to return goods, or if it's an overcharge on his invoice, so he'll issue a debit note and request the seller to reduce the amount of the original invoice. So Tamello is the answer here. The book of prime entry used by Tamello and book of prime entry used by Aswell is you need to write no entry because debit notes are not recorded in any book of prime entry. Then they are saying credit note will be issued by, again, when Tamello issues the debit note, and when Aswell will receive all the goods, and when she'll see the goods, and if she thinks that okay, Tamello is right, the goods are faulty, she'll accept the returns and she'll issue a credit note. So I'll write here Aswell is going to issue a credit note. And the book of prime entry that will be used by Tamello. So Tamello will be receiving credit notes in this case, and whoever is receiving credit notes is the one who actually made the purchases returns. So when Tamello made the purchases returns and issued a debit note with that, a debit note was a request, Aswell actually accepted those returns and issued a credit note as a confirmation. So in that case, the book of prime entry that will be used by Tamello will be a purchases returns journal. So purchases returns journal will record the credit notes received. So I'll write here purchases returns journal. And Aswell will use the sales returns journal because for Aswell it's a sales returns, and for Tamello it's a purchases returns. So credit notes issued are always recorded in the sales returns journal, and credit notes received are always recorded in the purchases returns journal. Then they have given you a document. They're saying the following incomplete document was prepared on 31st July 2019. And if you look at this document, they haven't mentioned which document is that. It's one of the parts of the question in which they are saying that you need to write which document is that. It's this specific document they are saying here. So on the top, it's always the issuer's address. So in this case, Aswell is the issuer. And then obviously the receiver is Tamello. So there's Tamello's address over here. And then the document is actually telling you various transactions here. There's a balance due at start. There is goods again. That means Aswell, the balance is increasing because of 470 goods that are sold to Tamello. So this is basically a statement of account, because the statement of account is that document which will show all the transactions with a particular customer. So in this case, Tamello is the customer, Aswell is the seller, and Aswell is issuing this document. And notice this is 31st July on which she's issuing the document. Statement of accounts are always issued at the end of the month after the whole month's transaction. After the whole month's transaction. So all of these transactions on different dates are taking place with Tamello. So when if you look at this from Aswell's perspective, on debit, Tamello's balance is increasing because Tamello is a credit customer for Aswell, and credit customers are your assets. So whenever you sell them more goods, your asset increases because they owe you more now. It's like when I'm selling goods to my customers, so and that too on credit, so my customers owe me more now. So in this case, again, they're saying state the name of the document and say it's a statement of account. So I'll write here statement of account. And then they're saying name the person who issued the document. On the top, it's as well's name, and as well has issuer's address is always on the top, and name and address of the issuer. So I'll write here as well is the issuer. And then they are saying state one reason for the issue of the document. The reason for statement of account is that you summarize all the transactions with a particular customer. Also remind the customer of the amount due. So I'll write here as well wants to summarize the transactions done with Tomelo. Also remind Tomelo of the amount due. Okay, then they're saying name the person who owed the opening balance of $300. Tomelo owed the opening balance because Tomelo in this case is the buyer as well as the seller. So the balance due at start, that is 300, was what Tomelo owed as well at the start. Then they're saying calculate the percentage of discount on 27th July 2019. So I need to see how much discount are we giving to Tomelo. Is $6 is what we are giving, right? And $2.94 is what Tomelo is paying us. $6 is what the discount that we're giving, and cash discount is mentioned over here. So this is a cash discount. I know this because this is at the time of payment. So Tomelo, when Tomelo is making the payment to as well, she's giving him a discount of $6. This is a cash discount, also known as discount allowed in accounting. So that means the total amount was 300 on which this discount was calculated actually. So you'll do here 6, that is the amount of discount, divided by the total amount multiplied by 100 will give you 2%. This was 2% discount. Okay, so 100% amount was 300 here. 98% was 294 because $6 discount was given, which was 2%. And after the 2% discount was given, Tomelo had to pay 294 too as well. So that is how you'll calculate the percentage discount here. This is cash discount. Calculate the balance due on 31st July 2019. This is quite simple. You can make this account of Tomelo. So if I make the account of Tomelo in the ledger of as well, so I'll start with the balance brought down of 300, and then when debit the balance is increasing, so I'll write here 470 on the debit when the goods are sold. So I'll write here sales. This is basically sales. This is sales returns. So I'm writing SR, it's a short form. Just want to show you guys how to calculate the balance. So 190 is your sales returns here. Bank is 294. Discount allowed is $6. So there will be a balance carried down now. The balance carried down will be the ending balance, which is due on 31st July. The balance due on 31st July will be $280. So that is for this part. So you'll write here, basically you should show the calculation, ideally show everything here. So even if this is what you're making an account, you can make it over here and show the working somewhere to the examiner. So the balance due at end is $280. So I basically use this T account to calculate the balance carried down, and I made the account of Tomelo in the ledger of as well. I'll write $280 for the balance due on 31st July 2019. Then they're saying state why this document was not used as a source document by either Tomelo or as well. One thing is that you should know, statement of account is not recorded in any book of prime entry. The reason is that when you're issuing a statement of account, the objective of issuing a statement of account is just to remind the customer of the amount due, number one, and summarize the transactions for the customers. So the document is not issued on a transaction. A transaction is not occurring here. When invoices are issued, goods are sold on credit. So that is a transaction that is happening between two people, the buyer and the seller. But in this case, it's not a transaction that is happening, but we want to summarize the transactions for the customer. So I'll write here, on 31st July, there was no transaction taking place, and as well is issuing this document to summarize transactions for Tamelo. So as well is issuing this document. So this document is issued by as well to summarize transactions for Tamelo. So this is not something that will be recorded in any book of prime entry because no transaction is taking place. So there is no double entry for this. There is no transaction happening between the buyer and the seller. Then they're saying as well divides his ledger into three: the sales ledger, the purchases ledger, and the nominal ledger. So they are saying here there are three ledgers here. So you guys know that already, that ledger is divided into subdivisions. So there is one subdivision, it's called sales ledger. There are personal accounts of credit customers in the sales ledger. So personal accounts of all credit customers. So my credit customers are those who are those whom I'm selling goods on credit. So sales ledger will have personal accounts of credit customers. So only personal accounts, name of that every person to whom I'm selling goods on credit. The sales account will be in the nominal ledger. You should know this. This is a very important it's a very important concept here because students have this perception. They have this perception in mind that since it's a sales ledger, it will also have the sales account. It does not have the sales account. It just only has the customer's accounts. The personal accounts of each of the customer will be recorded in the sales ledger, and in the purchases ledger there will be personal accounts of all the credit suppliers. So personal accounts of all credit suppliers. Yes, so each of that person from whom I'm buying goods on credit, their T accounts, their personal accounts will be in the purchases ledger. So there'll be another, in the cash book, there's a bank and cash T account. Okay, so all the other T accounts, which it's not bank and cash and it's not customers accounts and it's not suppliers accounts. So other than that, all the T accounts must go into the nominal ledger. So sales ledger will have trade receivables, personal accounts, the customers to whom we are selling goods on credit. Purchases ledger will have trade payables T accounts, the suppliers from whom we are buying goods on credit. And then cash book will have bank and cash T account. So all the other accounts other than these will be in the nominal ledger. So drawings account will be in the nominal ledger, sales account will be in the nominal ledger, sales returns account will be in the nominal ledger, purchases returns account will be in the nominal ledger, rent account, fixtures and fittings account, machinery account, provision for depreciation, all of these will be in the nominal ledger. So yes, state two advantages of dividing the ledger into these three sections. So I would say if you divide the ledger into these three sections, the greatest advantage is that it becomes very organized. So you know under what heading, what account you will find. Like let's say I want to see the customer's account. So I'll go to the sales ledger subdivision and find out the customer's account. So it's very, this helps us organize the ledger. As well can find all customers' accounts in one place. Similarly, all suppliers' accounts in another subdivision, that is the purchases ledger. And then the other thing is that when there's division of the ledger into the specialist areas, this is also called division of ledger into specialist areas. Similarly, we also call it subdivision of the ledger. So if we do that, it's very easy to actually divide the work. So we can ask one bookkeeper to actually make the sales ledger. We can ask another bookkeeper to make the purchases ledger, let's say. So division of labor becomes quite easy. You can divide the work between different bookkeepers. You'll say as well can divide the work between different bookkeepers. Okay, the next part is saying complete the table by naming the ledger in which as well would maintain each of the following accounts. Tamelo's account will be in the sales ledger because all customers' accounts are in the sales ledger. Okay, ledger is very different from journal. Please don't confuse it. How do you actually, what is the accounting cycle? Number one is business documents. You use the business documents and make the books of prime entry. So books of prime entry are 7: sales journal, purchases journal, sales returns journal, purchases returns journal, cash book, petty cash book, and general journal. So and then cash book is basically a book of prime entry. Also, it's part of the ledger, the cash book. Then you have ledgers. So once you post everything in the books of prime entry, then you move on to making ledgers. And ledgers, if you go on into if you go and look up the definition for ledger, a ledger is a collection of T accounts. So all the T accounts are there in the ledger. So in the past, when accounting was very manual, it was not computerized. In that time, ledger was like a book in which you had all the T accounts. So yes, ledger is different from journal. Please don't confuse both. Journal is a book of prime entry. Sales ledger is in which you have T accounts of all the credit customers. Sales returns account will be in the nominal ledger. Lerato, a credit supplier's account will be in the purchases ledger because trade payables accounts are in purchases ledger. Then they're saying, okay, purchases account will be in the nominal ledger. Like I told you, purchases account goes in the nominal ledger. Carriage inwards is an expense. Expense account will also be in the nominal ledger. The T account basically. And then you guys should also know that nominal ledger is also called general ledger. So when someone says general ledger, please don't get confused. It's also called nominal ledger. So there are two names for general ledger, also called basically nominal ledger. So thank you so much for watching. Hope this helps you guys.